Live from New York, I'm Vonnie Quinn.
And from London, I'm Guy Johnson. This is Bloomberg Markets. Vonnie, it's time now for Futures in Focus. Let's turn our attention to the CME. Oil in a tug-of-war between surging American shale production and OPEC cuts. The US production seems to have got the edge right now. Joining us now from the CME is Chris Gersch of Bell Curve Capital. Chris, let's talk technicals first of all. The equity market's really struggling with some key levels. Is that what we're seeing in crude as well?
That's what we're seeing. We're seeing a huge sell-off this morning, actually modest considering the dollar rally yesterday. 2%. We just could not hold that 52 level in the WTI.
In terms of the technicals, kind of what does the Fibonacci level look like? I'm hearing more and more about this in terms of the resistance story for crude.
Yep. As we have set this new range, the Fibonacci level that we're keen on this morning is at 51.10. We bounced off of it pretty aggressively, coming up about 80 cents, close to 52, which it hit resistance, and now it's pulling back towards that level. I expect if there's any sell-off in the S&P, we're going to test that level 51.10 in WTI by later this afternoon.
How important are the production levels in all of this, the production numbers that we're seeing? How much is that playing into the story?
Yeah, the production levels have hit all-time highs. We expected to hit 12 million barrels in a month, starting in 2019. We almost hit that in the fourth quarter. Production continues despite a lot of people saying CapEx, a lot of the slowdown that we saw in fourth quarter in the equity market's going to carry over. We're just not seeing that, but there's stimulus in China, Euro, and the Fed's getting a lot more dovish. So ultimately, I think this is going to be a floor, and I see us going higher in the next month or so.
You brought the dollar up, and you just talked about some of the stimulus that is being put into the market right now. How much of what we're going to see this year is going to be determined by the battle between OPEC and the United States and within OPEC, and how much of it's going to be really determined by what happens to the buck?
I really believe that right now the correlation between the strong dollar and a depressed oil market is the winner right now. I think that the Fed is going to continue to play out. I see if we see another rate hike, I see levels of oil staying relatively low. But if we see it being pushed off and inflation becoming a little bit of a concern, I see it reaching that 70 level by June, July this year.
Chris, how is the market set up? If we get through some of these key technical levels, how much clear air is there above that in terms of the market's ability to go through the level and then really surge through it? Kind of where are the stops right now?
Yeah, so we have a descending wedge right now, and ultimately what that means in layman's terms is we have a lot of consolidation around these key Fibonacci levels. If they do break out of that wedge, you have a $5, $10 upside that you could see, but it's really tied to that dollar right now. Unless we see that dollar weaken, which we don't expect for the first quarter, you're not going to see it break out of 55, 56 level.
Chris, great to see you. Thanks for joining us and giving some insight. Chris Gersch joining us from Bell Curve Capital. Thank you very much indeed. Vonnie.